All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for, April 23rd, 2024. Start with the 30-minute hybrid swing trading portfolio. So this is Alcoa, 30-minute charts. All right, so this was yesterday's trade that exited here. It sold off today. I missed the short, but I took a 1, 2, 3 entry here as it crossed the Bollinger Band mean and the 3-day and 5-day anchored VWAP standard risk. It moved a little bit, but really just took a small fractional gain, not much there, very little follow through. AI, on the other hand, had a emerging dragon. This was yesterday's trade. There's the top, gapped up, gap and go. It ran all the way up here, came back through the RL10, through the VWAP. I stuck around probably too long to the edge of the dragon and took that exit for about 1R. It followed through pretty nice the rest of the day, and it closed well. There was another R of recovery move to the upside that I didn't get, but this actually feels pretty good because when you look back, it's cleared the previous resistance. So this could be a candidate for third day momentum going to the upside in AI. So I like that one. Yeah, on the longer term, you just notice it has a lot more room to go back to the 10-day high and the 30-day anchored VWAP. So if we get anything like a breakout from here, then it does have quite a nice move to go. And there's some measured areas of resistance that act as targets on the way up. So there's 3 potential legs to get back to this region. So, but this looks good. This is like the first leg, second leg, and now more momentum would be unsurprising. So I like this. 2 days of momentum have been very good. Let me zoom in. Caterpillar was a continuation COTA 2 for an R. It ran up again. I probably stuck around longer than I had to. It came all the way back to here to preserve 1R. I gave it every opportunity to keep going. When I exited here, it was enough to then trigger it to there. But you have to exit here at the edge of the VWAP to prevent it coming back and scratching, which would be unprofessional. Cliff, on the other hand, was a collapsing dragon, huge gap down, and then a further collapse, and it went through the 150-day anchored VWAP. So that could be the first leg of, significant sell-off. And it was a tight stop, and it just moved out in our direction and had some cushion. And when it bounced back off the VWAP and kept going, if it had shown any more strength, I have to exit around here. But it rolled over and ended up giving us about 4R. And more to follow tomorrow. I just didn't want to hold overnight. I like that one. CVS, same trade. Not a big gapper, but it did break through the VWAP, the Bollinger Band mean. The VWAP rolled over. It broke through the 5-period, 3-period anchored VWAP. What I started off was this one, was the 1, 2, 3, and then that rolled over fast. So I took a half an R loss, and then that was a stop and reverse, and then this one paid 1, 2, 3. So net 2.5. But this one was justified on the long side because it had all of those upward waves. And originally it looked like it was working, so I probably stuck around too long, but I waited for, genuine confirmation that it was failing. And I used the PSAR and the Bollinger Band mean and the 3-period VWAP as the signal that it was over. And then when it collapsed hard. Probably could have had a second position here when it broke below the 5-period anchored VWAP. But we'll take 2.5 on that one. DIA, COTA 2 continuation for an R. Disney, gap and go for an R. And again, this is the standard exit now. After a nice run up and the R10 peaks and starts reversing, I then take the exit at the skin of the dragon here to give it this much room to wiggle and go. But if it doesn't, have to get out there to preserve 1R. Same trade in Devon Energy, 1, 2, 3 in the morning, and a nice run up, R10 peaks, exit of the dragon there about a little over an R. EEM, this is a emerging dragon gap and go for 2R. So that's what a two-day directional recovery looks like. So if we go back 10 days-ish, you have this collapse through the 30-period anchored VWAP and 1, 2, 3 harsh days of selling. So 1, 2, 3 days down, 3 days sideways. When it fails to fail further, and actually it tried here and then failed back, but that nets out to sideways. And then the next leg up, that pays off. And we exit here for the 1 day of momentum. And then today continues with an emerging dragon, and that's the 2nd day of momentum. So there's probably 1 more day's potential momentum in here, back to the 30-day anchored VWAP, and brings it all the way back to where this whole thing started from. But notice that day 1 gains are 50% larger than day 2. So day 3, if that continues, this will start feeling like it's rolling over, and it just muddles through. EEM is a symbol that gaps a lot, so that's why I don't typically hold that overnight. ETHE, the slide continued a little more. If you're trading directly in the currency, this is a downside warning here, back to the 5-day anchored VWAP. Any recovery that's north of this should be seen as a COTA 2. So I'll be looking I would play a COTA 2 here instantly. And anything above, say, 2360 is going to be an emerging dragon, and I would certainly play that. Because if you get that signal, then it wants to get back to here around 26. If you're trading the currency directly, target 1, probably target 2, target 3, and then this is where the real collapse below 20 occurs. Mexico, this is the 3rd day of momentum. And now here's one where after the sell-off, the 1st day of momentum was small. 2nd day was a little larger. The 3rd day was larger still. And we like this one. It closed well. EWZ, same trade for 2R. Brazil, or that was Brazil. Home Depot, fractional gain continuation. Home Depot, no trade. Intel, no trade. International Paper, there was a gap down, and then I missed the morning hook recovery. So here's the gap down to here, and then it recovers all the way back up into here. That's a typical morning hook trade, and I just missed it. IYR, continuation trade. So this was, yesterday was I had thought about re-entering the trade and I missed that afternoon trade. Now this is the second or third day of momentum. That looks really good. It closed above the VWAP and it closed above the 3-day and the 5-day VWAP. And here's the 30-day up in here. 30-day anchored VWAP. So that's been a significant sell-off. A good base is established, and now it's just powering its way north. I'm ready to continue to ride that train. Coke was a Cotta 2 reentry for an R. Regional banks, Cotta 2 reentry for an R. That's what 3 days of momentum, 1, 2, 3, looks like after a sell-off and then a period of stabilization and then a breakout to the upside. So again, we're just measuring the distance from the 150 to the 10, and then it's a symmetrical trade. McDonald's, Cotta 2, 1, 2, 3 in the middle of the, I missed the short side. 1, 2, 3 here, and it pays an R. 3M, tried the gap and go, kept a fraction, missed the short side trade. Merck, missed the downside trade. Microsoft, so key tech leader on the second day of momentum, gap and go, tight risk, and just held sideways, and it came back to the edge of the dragon and the VWAP, so I just wanted to lock in one. That bodes well for tomorrow. Marijuana, no trade. Nike, no trade. NVIDIA. So this was yesterday's, one of the few trades from yesterday that we held. It closed here. Today it gapped up. I probably should have gotten a second position here, but I just wanted to let it run. So that's a single position that's holding about 6R. That has a really nice cushion. And now it really has to get above this. Call it 850. So I'm just going to play it as a single position. If it gets up in this region and starts to fail, I'm happy to cash. If it gets above 850 is where I'll add a second position. So I'm giving it that much room to develop further. Clean energy. This was a gap and go, and then it exploded in the first hour and then began to just steadily decay. I took the exit at the VWAP instead of waiting for the skin of the dragon. This is a case where the peak in the R10 did not occur until back here, all the way over here. And I exited here at the VWAP because I didn't want it to let it go below the VWAP. And that phenomenon occurs because you have such an enormous first bar up and then that steady decay. It takes this long for the R10 to roll over, but I had to act sooner in order to preserve 2R. Closed, it kept half of the day's gains, but it was not an inspiring close. The only positive thing there is that it still is well above the 5-day and 3-day VWAPs. So there could be some buying pressure tomorrow, and I'm happy to get back in, but I did not want to hold that overnight. Palantir, second day momentum, gap and go. Yeah, you could very easily have done that. It's just that, Jay asks, why not just, you got dragon horns and just exit right here. That's probably a better one. I'm on Palantir. That's probably a better exit, but I'm a little emotionally committed to this one. I want it to do well, so I was trying to give it as much room to recover as possible. So this is the last rational exit I can take. This is probably a better exit on Palantir. in retrospect. That's a better exit. Rivian, gap and go, dragon skin exit for an R. SOUN, this is a very strong emerging dragon gap and go, and it runs up. There's if you're playing dragon horns, you might see that, and then maybe exit here. I'm kind of content taking that for a little over an R. The S&P itself today, second day strong momentum up. It's back to its 10-day anchored VWAP. Tesla was a gap and go, and then no follow through for a scratch. Walmart. This one was a trade from yesterday that we held overnight. So yesterday's trade was here, and it ran up to here, and then it gapped and sold off harsh to here, so I had to get out. And then it kept failing, so it's like, oh, wake up and short. And then it ran all the way down here, and then came all the way back up to the skin of the dragon for an R. That was a lot of travel distance for one R. So I could have played that one much, much better. I gave back a lot here. I gave back a lot here. I only walked out of this with one R here on this one and one R there on that one. But that nets to 2R. So I'll take that. But there was more to be had in Walmart, and Walmart is definitely in play. You can just imagine the psychology in Walmart when it has that much of a change, from 60.50 to 58.50. That's a 3% swing in a matter of a couple hours. That's very volatile trading in Walmart, a changing of the guard. US Steel was a collapsing dragon, continuation south for an R. XLI was a gap up, emerging dragon, and capture an R on a pullback to the VWAP. Again, I capture that one before it gets to the skin of the dragon, and that's before the R10 even peak. So the rule could probably be after a strong move, don't let it go below the VWAP and preserve those gains. So that's about 2R. Here's some 3-minute charts now. So now we've drilled down from 30-minute to the true tactical trade and EWW. And here's the open. The opening 3 minutes sold off all the way back here and then came back through the VWAP about 20 minutes in. So the whole market was doing well. So I ventured long. Dragon skin after the 2 rollovers of the RL10 for about an R. Missed the re-entry. I missed the short. Kind of stabilized around a sideways Bollinger Band and a sideways VWAP. The whole market was actually doing pretty well right now, so I tried this little breakout above the VWAP and the Bollinger Band main for a fraction, caught a 2 re-entry for a fraction. So net about 1.5 for the day with some grinding, and then I missed the afternoon move. So that's Mexico today. It was tough. This was NVIDIA. I'm sorry, that was Mexico again, sorry. Yeah, here's it. Yeah, NVIDIA, where are you? Excuse me, this is like a quick frog. So here's the 30-minute box. So think of that as the OR30. And it cleared that, and it caught a 2, and actually an emerging dragon when you look at that, because the caught a 2 would be in here. And because it's north of the RL10, that's an emerging dragon. Standard risk. Exit at the skin of the dragon for about 1R. sells off all the way to the VWAP, holds support, crosses the Bollinger Band main. So there's my standard risk. And it gives another R. So that's 2R on opportunity trading in NVIDIA is how I think of that. This was AI. This was a big gapper and an explosive move up on large volume, standard risk, and it just blew right to the top, came harsh back and captured 2. And I missed the downward move and I missed the series of kata 2s to the upside. But situational trading in AI. The 30-minute bar was probably a smoother ride on that trade. This is Devon Energy. So this was one of the biggest gap downs. So there's yesterday's close, and it gaps down and then sells off. That's a 1, 2, 3 off the bottom, and the VWAP is turning. So I treat that as a morning hook. Standard risk. Preserve 1R. Kata 2, scratch, Kata 2. And those Kata 2s are all happening north of the VWAP and north of the Bollinger Band mean, which is rising. So I have a long side bias. There's the PSAR break, standard risk to the bottom of the PSAR, and collecting a little over, say, 1.5R. So that gives us about 2R on that one. So a lot of opportunity trading, little extra pieces here and there. Go to the traders. Cuts it, maybe waits too long on this one to get long, but does a good job preserving capital. Holds at the VWAP. I like that entry. It scratched. There just wasn't anything there. Just got to, I think maybe this last one was probably extra trading. It was already solidly in the sideways quiet channel. Just wasn't much. That's really maybe the only extra trading that didn't need to be done. Does a nice job here on Cliff and getting paid on the key move of the day. Here and here and here, he's able to get aligned pretty quickly. This one might have gone a little sooner up in here, but waiting for the PSAR and an absolute clearing of the noise, that's still a really good entry. The fact that this rolls over underneath the VWAP is confirmation that that move is working. That's a brilliant exit. So 1.5 on Cliff. Some grinding here in IP. There just wasn't much. He stayed out of the chop later. That's good work. This is Brian working hard in the currencies. This is on the 5-minute. This is the euro, US dollar. So this is yesterday's high. It gaps up to here and then is rolling down. So that's a collapsing dragon or a SFC. When it cannot make a new high right here, that's a great short. Has a nice respectable stop just above the edge of the dragon and rides this for what is available. When it comes back through the dragon and hits the PSAR, he's out for 1.47. That's really good work. There might have been something here on the PSAR. Like I might have been interested here or here. But that's 1.5R, very nicely done. George crushes AI on the gap and go. And what makes that especially attractive is the fact that it's really an emerging dragon. There's no resistance whatsoever. So that's pure buying pressure. So he holds his nose and jumps in. And talk about your dragon horn exit, 2.7. Beauty. That's a good SOP. Let's see. Now there's so this is Kevin's. You'll recall yesterday he was working on this decision and kept a piece and had mapped out the potential move to here of 4-1 and this one to 8-1. He gets the second day of momentum as it starts to roll over, sells 50% to make bank, and is holding 50% over with a cushion of 3.5 and a nice solid PSAR move. Now, what's nice is that you've got two nice days of clear directionality, and it's still on the side of value. If I take like the 30-day anchored VWAP as something like 30-day fair value. So there's still room in here for somebody that needed persuasion that, hey, I got 2 days of momentum, let me get on board. That's like the third or fourth mouse. So I think there's still some room to buy inside there. And then if it breaks above this little resistance, this is where that next leg of 4-1 could occur. So if this half position continues to go up, you could think about adding the second half back on here and then adding a full second position above 68. So nice work from the boys. All right, so looking at our 150-day look back now. So there's our 150-day high and the sell-off to here, to this support level. And now we've got the little bit of a rebound, a little bit of a cushion, and here's today's range. We're a third of the way back up to the all-time high, so there's a bit of a cushion there. This was 2 days of recovery. It's calming fears a little bit, but still a tactical trade. Today was like a 1, 2, 3. So if this was a 1, this is a higher low and it closed here. So that makes this bar 1, bar 2. And what that allows you to think about is a 1, 2, 3 entry is just above the high of bar 2, which means you could think about being long at about 502, which is what we said yesterday. And then we have a really nice move to the high of the day and then just very little sell-off. So that's really double plus good. And now we're within spitting distance of crossing the dragon and the PSAR. And so if we get that move tomorrow, that's at about 508. This is kind of no man's land here, where the first tentative buyers, and then if it gets above here, then off we go. And then our target would be the 30-day anchored VWAP and the Bollinger Band mean, call that 514. And then your 10-day high at 520 and all-time high at 525. So that's your price step ladder all the way up. And you have now 2 days of pretty good momentum to offset the 10 days of the sell-off from this consolidation. Harsh sell. There's the peak downside of the RL10. Here's the skin of the dragon, which is where you would exit a short. And now that's why this is second day momentum is a good long. So I have a tactical long side bias and I have my price ladder established. And this is where I pick up optimistic feeling, which is the all-time high. So let's look at our, this is on 30-minute charts. This blue box is your 10-day range. This black line is your 30-day anchored VWAP, and I would treat that as the fair value, which is what, 513.50-ish. Here's your 10-day anchored VWAP. We're right back to the 10 days fair value. So the harsh sell-off bottoms here and works its way back to fair value. That's your next leg up. That's your next leg up. And today was a good directional move. Feels good. And what I like is notice the 3-day anchored VWAP bottoms out here, and then the last day and a half have been a nice recovery. People willing to buy it at higher prices on volume. So closed here, and our anchored VWAP is there. So that's a measure of optimism between this level and that level. That's optimism. We like optimism on the long side. It's good. Still bullish, volatile. The little 2-day recovery has helped turn this thing around short term. Still risk off, still volatile, still favoring sharp moves in either direction. So we have no directional bias. Strong move in Goldman Sachs. Weakness in Nucor Steel. And Cliff was down too, so that's part of the weakness in the metals. 10-day breakouts on our friends Coke and McDonald's. Still some good upside there in the old reliable Coke and a hamburger. Tesla finally on some good news in earnings. Pretty hellacious move. In the ETF, still got a ton of things on the auto framer that test out well, so it's a buyer's market. Lots of things to trade on the auto framer. This is swing trading 1 day at a time, using these as the widest swing parameters for your automatic framing data. Mechanical entries, initial stops, and 10-day target. Quite a few squeezes today. I like the squeeze in Intel and Home Depot and the Dow. That to me is the index of choice right now. This is the TC2000 report on the auto framer. There's 6-1 in Intel, still 5.5-1 on Tesla. Being dominated by the winter, so there's still plenty of upside. And you can see how widely diversified the strength was today. So the ones that are also strong on 10 days are the ones where the real strength is in. That regional bank ETF looked good, as does Europe. And over here, it's your finances, XLF. There's McDonald's doing really well. And Coca-Cola, still like them. Walmart has a long way to go to catch up to its former strength. My brother asked me to go back, take another look at SOUN. Yeah, so this little 2-day recovery in SOUN looks promising. That's sort of like the automatic rebound. It was down to 350. So that's a considerable sell-off from where it was at 550. I mean, that's a 40% sell-off.
If you
And
can
it's more
look
than
back
that
to
when you take a
the
look at where this thing has been. I mean, it was at 9
if you can scroll out to
at the peak of optimism, down to 3, so that's minus 65%. So the 2 days of recovery is nice. Not out of the woods yet. I would be looking at this as, in terms of just 1 day trading. It's got 2 more days
oh
of
yeah,
gains to make back to the 150-day anchored VWAP, which feels like fair value. Like this feels like excessive optimism. This feels like fair value. When that cracked, that's excessive pessimism. That feels like a bottom that's had 2 days of recovery. So tactical recovery of a couple more days to 550 is just normal noise recovery back to fair value. Then the real work begins to get north from here to there. But I think you got 2 days of optimism in the AI space, is how I would read that. What else are you saying?
nope, you were addressing
Yeah.
what I was saying. It's
Okay.
just in that area. That's if we look back to the 26th and then again to the 11th, that's when it starts to take off again. So if we can get to that critical level of 529 or 530,
Yeah.
who
Yeah.
knows?
Yeah. So this is where it first became interesting.
Yeah,
So now
yeah,
it's locked in right in here. Now there was a lot of news and enjoyment. This is when AI was in its heyday. This is about where the market hit all-time highs, and this was the AI craze, the
yeah,
latest version of it, because of their association with
yeah. This is
NVIDIA.
a
Then NVIDIA took a 20% haircut. This thing
yep.
took a 65% haircut, but it's right at the price level that established this base. So you got 2 days of momentum to build on. I still look at this as a pure day-to-day tactical
Oh,
trader
absolutely.
with 2 more days of potential upside. It has to get above the 150-day anchored VWAP
Yep.
before it's a serious contender.
Yeah,
But that's
yeah.
a tactical trade to here, and then we can think of swing trading from there.
It's just a good inexpensive for guys that
Yeah,
want
it's
to.
like an option on AI.
Yeah, that was it. I just wanted to.
Sounds good.
It's something I watch every day.
Yep. All right, back to the shop here. Uh, yeah, so Tesla, there's our top 5 or 6. Tesla, marijuana, Nvidia, clean energy, Intel, all the usual suspects. So this is the beginning of a potential turnaround in the slope of the RL30, which is the health of the market. And it's happening at a level, near -1, which is the normal recovery location. And if you get that move from -1 to +1, like this, that's a nice move. Like for instance, the move from -1 to +1 was this move. From 410 to 470, 480. That's a $70 move on 400, which is about 18%. So it's pulled back 15%. So this could be, if that's the turning, if that's where it holds, and that's the beginning of the turn, that recovery to the top of the river is in play. And then it's a second leg to get above the all-time high. So the first leg is simply retracement back to the previous high and has to put that work in. And then that's where we would start feeling enthusiasm at 525. All right, that's everything for today. We'll get this published and posted and be ready for them tomorrow.